What's going on, champs? Hope you guys doing well. So what it is, I did a tweet about an hour ago in regards to how to trade the bear market and the bull market itself. Just a short, simple thing. And what I said is the key in the bear market is not to focus on higher prices. It's observing key areas for rejection to short. And in the bull market, your observation is the key areas for support to actually long. So on paper it sounds very simple, but on practice it's a very difficult thing. And I'm getting a lot of DMs of like, oh, which key frame which time frame should I look, and how do I spot this out and whatnot. So what I thought, I said, you know what, I'm going to do a little video in terms of just looking at, shorting the market itself and how would you play this level to level, really easy. And then you yourself can actually, go back and then play around with this and back test it yourself, and hopefully this actually helps you, in the future. So we are in a bear market. That's a fact. We can't disagree with that. You can't even say to me that we're in a bullish market. There's nothing that showed me that it's bullish at the moment. Long term, talking about. Even in the short term, we might have a short term boom push in the market. It could be a couple of days, couple of maybe a week or two, but nothing too crazy for me to say, yeah, you know what, we're gonna go to all time high for crypto. But that's not the case. Reason being is if you guys watched the video from yesterday, we talked about dollar index. Dollar index is looking extremely bullish. It's potential we can go to 120. If that's the case, the stock markets, the cryptocurrency, everything else is going to collapse. And as you can see, like even globally, it's horrendous. The UK, for example, electricity bills going up 80%. Cost of wood, cost of metal, everything's gone up stupidly more than it ever was. So there's nothing bullish in the market right now apart from dollar index, in my humble opinion, really. So what I'm gonna do, I'm gonna go back to like a BDC chart, and I'm just gonna run down a few things of how do you actually pick this out. So what I'm showing you right now is the same principle you can apply on many things on different time frames, but it's down to yourself to backtest it yourself and to try and understand what's going on. Okay, so we're gonna go back to Bitcoin, back to the early days when it was all beautiful and price was going up stupidly high and stuff like that. Then we had a pullback, and then we made this higher. Then that was it. All right. Then the market turned itself down, and it's been horrible ever since. Okay. So I mean, from the all-time high 69K, we're now what, sitting just below 20K. Not looking very good there. But anyway, let's just go back in time, and hopefully in the next bear market, you guys can pick at the top before I do. Okay. So let's just pick this high itself. This is the previous all-time high before we actually pushed up and made a new all-time high once and then twice there. Okay. To me, that's an SR. Reason why, that's always going to act as resistance until we come up, flip it, hold above it. So hold above this high itself, for example, and then that will be a trigger to long your longs over here, going for higher prices. Never did that. All we did really, we had some sort of deviation. Price got up, deviates it, gets back below it. Price gets back up, deviates it, gets back below it. Okay. Now, if we're looking for shorts, right? If we're looking for longs, the price action will be like this. Okay, something along the lines of that. If we're looking for shorts, the price action will be like this: break down, lose this low, off we go, and that will be a trigger for shorts, and this will be a trigger for longs. Right. So how do we pick this out? And all this is just lines. A lot of people say I can't see it, I can't see it, but that's because you're not training your eyes. You've got to put the work into it, and I can't feed you this all the time. It doesn't work like that, right? It doesn't work for me to tell you, yeah, here we are, here we're short. No, everything that I do here is for your own benefit. I don't have to do this, but I'm going to teach you how to actually pick out this pattern over here, okay, and everywhere else, okay. So what we're looking for areas of support. Okay, we said that we're looking for key areas to short and key areas for support and whatnot. So we're in a bearish market. What we're looking for, so let's just say this is this candle over here. Price was capped off this low around here, and as you can see, we're stuck between the low and the high. We've had some deviation on both sides of the market. Let me bring this back up. Yeah, we had some sort of deviation on both sides. There we go. Both sides of the market. And as you can see, deviation on the upside, downside, upside. And here, when we lost it and retest this, that is what we're looking over here. You see this pattern over here? Let me delete that because we don't need this. You see this pattern here? Price gets up, gets below it, finds resistance, and here we go. That's your trigger the short. Okay, you might not be able to see this on your mobile phone. You probably have to go on your laptop or your PC or iPad, for example, or something like that, on a tablet to see this unfold. Price literally does this: gets up, makes higher highs, and then once we lose this low here, find resistance off this range low itself, breaks down. That was your trigger to enter, and you got one set of trigger right there. So if you look at here, let me just try and do this quite neatly. We've got two sets of SRs there. right? So the first one was the line that I just showed you there, and the second one was this low there. If you didn't enter here, once we break this low and find resistance, which we did here, that was your second entry to go down low. I would always say price is always in a range, so we go from high to mid, mid to low, low to high. Okay, so if this is my range low, for example, approximately here is my mid range, around that number, around that level itself. Not drawn to scale, but it gives you an idea. So once we lose this low, where are we targeting? Range low. Once we lose the range low, where are we targeting? Once we lose this level over here, where we're targeting mid range, and once we lose this level here, where we're targeting range low. Okay, so obviously price comes over here, finds support at the mid range, and now same thing. What you're doing is you're looking for area consolidation, and this is it. As you can see, this is on the daily, right? And it's the same that you can see on the 4 hours, the hourly, and whatnot, and you work your way down. Okay, so price range bound in this area here. We lost this low here. On the smaller time frame, you can see this price action unfold itself in its own way very quickly though, but it doesn't give us like much of an entry itself in terms of perfection, but it gives us the same idea itself. But what happened is for most people who would have missed this low here, it's not a problem. Once once it comes back down, it comes back down. It doesn't even retest the range low. It comes back up, holds above it, and once it gets to this area, that was the retest. Where? Because that was a range low. So that was a key level. Now, most people in crypto was incredibly bullish at the time, right? Which is not a problem. But would I be bullish? Would I be bullish here? Not just yet. Why? Look at the price action, the market structure. So this is the high. That's the higher low. The lower low, lower high, lower low, lower high. If we are gonna make a breaking market structure, we should have actually taken this out, reclaimed this, hold above it, and that's the breaking market structure for us to say, yep, we're going to go for longs into these liquidity here to here and into here and then range high. That's what we're looking for, level to level kind of play. But it doesn't do that. So you be patient. You don't enter longs. That's the key thing. It's always about patience. You don't enter into any longs just yet. And if you don't want to enter shorts, you don't need to enter shorts just yet. You are right to enter a short with the idea that it is a bearish market structure. It is bearish market structure, and it is a bearish market to enter in with a stop loss over here, playing it back to range low, right? Now, if you look here, now price did this thing, gets up, consolidates, finds resistance off the range low, similar to this price action, sends it back down, taking that liquidity over here, here, back to range low. Same situation, same scenario. That's all it did, right? And then go fast forward into the future, right? A bit more in the forward. Well, no, actually, let's leave that back on because that's quite important for us. Look at this range bound environment what we got here. Got this high and this low. Same thing. Price range bound. If we want to be bullish, reclaim this level, hold above it, then we can go to this target, liquidity, go into here, and play it level to level, right? But it doesn't. Instead, I actually caught this one on, when I was in Turkey. If you guys remembered, we talked about it as well in the early days of, I think early June this was, and caught this right here. Breaks down on the lower time frame. It showed me the bearish market structure, but a stop loss here, hard stop there, playing it back to this area, 19.8k. What's so important about 19.8k? The key levels are always going to be the important things on higher time frames. 19.8k is the previous all-time high back in 2017 on Bitcoin. Okay, so then now I know this is all in the daily time frame, and you're like, but dang, how am I going to pick this up? I don't have the patience. Yeah, sometimes you do need the patience a little bit. But anyway, we'll talk about this now. We're in this price action over here. What have we got here? This is the high, and this is the low that's been capped out right now. Okay, so as you can see, price got up, did its thing, range bound in this environment. And for those who actually know how I play a range bound environment. I love playing this. It's the easiest way for me to play the game because you're just playing high to low, low to high. That's all it is. But anyway, we get back up, come back in, haul this in, whatever, right? So once we reclaim this level, this move was so quick. I didn't play this, to be honest. This move was really, really quick. But once we come back in, you see this grind, we're finding key areas. This is the key area. That high is a key point. Why? We got resistance, deviation, come back up, flipped at support, come back in as a deviation, then we come back up. So this area is always going to be a key important level, right? This is the level that's the key point that people need to actually keep an eye on. And what happened is we come back up, find resistance so many times we can't flip it to hold above it. If we did something like this would be a long, and instead what happened is we lost that level. You can use your trend line if you want to use a trend line. Once we lost this, come back down, and then off we go, playing it back to the mid-range between this range itself. Now that's one thing. And the second thing is, if I were to look at it this way, let's have a look. If I go down on a smaller time frame, now I'll show it to you. Let's go on like 15 minutes, for example. Delete all this for a second. I'm just going to focus on this range band environment there. So if you want to look for shorts, right, look at this. You can mark this high here, for example, right? And you see this high itself acting as resistance, 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 right? That's the range high, and you can use this low, for example, for a low right here. I mean, it was really, really quick. You can see about that. Will I use this low? I'll probably use this low, to be honest. Yeah, I'll use this low here. And as you can see, right, price is range bounding in here. And what happened next? Jesus. What happens next? Delete this. Is that price gets underneath this area. I should move this up actually. It's a bit fucked up. Let's box this out. Right, around there. Okay, cool. Price gets back below here, and we've lost this level here. See, this is support. So if this was going to be support, we should have held above it and carried on going higher. But instead, the moment we lost this, breaking market structure. Market structure was showing to be bullish, right? Higher. You go the high, sorry, the low, lower, higher, high, higher, low, higher, high, higher, low, and then it's coming to turn itself back down itself. You see how it's curving all the way back down, right? To shoot back down over here. And then the key point is this. You see this range bound environment here? We've lost this low here. That was your trigger to enter a short and then back down there. So it's always about looking for key levels. So this is on the 15-minute time frame, and even then the 15 minutes is showing me these levels of support, and I showed you on the daily levels of support. Let's look at Bitcoin on where we are. Let's get my levels back up, and I'm just going to show you this. What's going on here with Bitcoin? Really, really simple. It's nothing but a range band environment. So when I say key levels to short, it's simple, right? So this is an example of range band environment. That's I don't know what's going on over here, but no. So anyway, we got Monday's low, Monday's high, deviation. Once we get back up, lose this level there. I'm going to show it to you again. Lose this level here, right over here, and you can see market structure is broken. Got a wick down there, lose this level there, wicks back up. Yeah, we have a deep wick into the range high, and then sells off back to mid-range back to range low. Same thing. And then all we're doing, let it do its thing. And if you want to play the short game here, again, same scenario, nothing else is different. As you can see, I'm just going to zoom this up a little bit. You got this high over here, for example, with this low over here, the range band environment, and as you can see, this high is invalidation, is holding the level itself. We have a deviation, we step back in, and once we lose this level, find support the mid-range, retest this base of consolidation. That would have been your trigger. If you missed it, with your stop loss, you're going to place over here, or your invalidation over here, playing back to mid-range, all the way down to range low, around this area here, right? And then it's just vice versa. You're looking for key levels. So key levels for this, in this scenario, was the Monday's high. Monday's high was acting as resistance throughout the whole week, and it hasn't changed at all, one bit. Always look at Ethereum. Now Ethereum showed me differently. Ethereum pumped up, right? And as you can see, I'm just going to show you this as an example, and then I'm going to call it a day there. Ethereum pumped up, as we all saw. I did say on the stream, I'm not looking to trade around NFP. I was going to let it do its thing, and then from there look at, see if there's a possibility for a trade. But price wicked into here. What was so key about that level, right? If you look here, you see, you see this high over here. See this area right there. This area there. That's your key levels right there. This was originally acting as resistance, right? This constellation acted as resistance. Come down, resistance. Come back up, resistance. Come back up, resistance. Acts as resistance. We have a deviation. Come back down, and then we had a short reclaim. We reclaimed it here. come into a key level, 1700 of this area. That is the second quarter range low of 2021. And that's a key level. If we want to actually be bullish, we needed to reclaim this level and go a lot more higher. But we lost that level. And the fact that we lost this level, we come back into this area of consolidation again, retest it as an again, it gave us so many opportunities, one after another. Let me show you. Right? If I were to do a range bound environment, this is the high and that's the low. And as you can see, price comes down, doesn't give a retest over here, comes into this area of the consolidation, which is the key area that I'm looking for, comes back for retest, the low, put a stop loss there, playing it back down with all this liquidity playing in play, and all the way back to 1440. What's so special about 1440? Again, it's a higher time frame level of 2018's all-time high for Ethereum. And then where we go, back into range low, and then we start playing the Monday's range. And then what happened is yesterday, as we can see, let me just remove all this shit. What happened is yesterday we're playing above Monday's highs, looking bullish. Everyone's getting all happy and you know, like say, yeah, we're gonna go a lot more higher. We're gonna go to 1800. I don't really give a damn. This key level here was acting as resistance. Once we come up there, you could have placed a stop loss over here if you want, or even above the blue box. Play back to Monday's low. We're playing it back there, and now same situation. Now we're back in Monday's into Monday's Monday's range, right? Now, if I want to see for me to start entering a short, right, is we've got this trend line going on. Oh well, let's see, we got this here. Start from the bottom. No, let's fuck it. Let's do this one. We got this trend line here. We're finding some sort of support over here. For me to be bearish, lose this level there, and that will be the trigger. So you know that the idea of the drawing itself, it's the same thing over and over again, and all you're doing is rinse and repeat the whole situation there. So now it's your. Hopefully this actually helps you guys out there. It's a short little video. But what your duty is now is actually going back and trying to pick this out. The key I would always say to you guys is that don't always look at the 15 minutes or the 10 minutes or 5 minutes chart. I know I look at 15 seconds chart. I'm not saying you should do that. End of the day, it's entirely how you want to play this. But me personally, what my advice is just zoom out. Like I did in the very beginning. Look at the daily. Go back to the weekly. Go back to the monthly. There are levels there you're missing out. And when you're focusing on this 5 minutes, 10-minute chart, 15-minute chart, you're missing the bigger picture. You're missing like key areas of support and resistance. So go back, have a look, and just practice. It's the bear market right now. You guys have time to actually study and make the most out of it. Because once the bull market comes in, I guarantee you ain't gonna bother studying. That's the truth, right? All of you guys think you're all a trader and you're gonna actually start making money, which is all good, but not gonna pay attention to actually key levels of taking profits. So if you put the effort into it now, it's only beneficial for yourself. Okay, so that's it for me, guys. Hopefully that's been a bit helpful for you guys, and yeah, I'll see you guys soon. All right, take care.